Hello, this is Alex Kazmark for the FXEdge.com, and this is your free daily Forex video for September 24th, 2009. Quick reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky. So please don't trade any real money until you've established a proven track record of success on a demo account. Trading conditions are always changing, so make sure to watch tomorrow's video to stay updated. Happy Thursday, everybody. One more day until the weekend. The FOMC made their decision today to leave interest rates unchanged. Their statement was to some extent neutral. Didn't really change much from the previous statement. They continued to talk about repurchasing of MBS securities and providing more liquidity into the market. Also talked about leaving interest rates at a low level for an unspecified amount of time, but for a lengthy amount of time. After they announced their interest rate decision, the dollar lost ground, but quickly recovered it after not seeing enough momentum to carry it further. It ended up closing stronger for the day, and this may be the turnaround that we've been looking for, as we now know that the 148.50 level for the euro will need a bigger catalyst to push it towards the 150 level. Today's emphasis should be placed on the reversal, and we await more dollar bulls to enter the market and start a trend favoring the buck. Again, this isn't certain. We have more important economic data out today and tomorrow from the U.S., specifically out of Eurozone. First, we have the German IFO Business Climate Survey, and then out of the U.S., we have unemployment claims and existing home sales. The G20 meeting is also meeting in Pittsburgh this weekend. And Friday we have core durable goods orders, as well as new home sales, and Governor Board Member Hildebrand is going to be speaking. So this is all out of the U.S. A lot of information that we're going to have to diagnose and digest and see which. We'll see if the euro can sustain this. If the dollar can sustain this recovery we're seeing. In the meantime, let's go ahead and cover the support and resistance levels for the majors. Looking at the euro dollar on the daily now. Now trading at 146.91, under 147. Dollar continued to push lower. We opened up an hour ago just above the 147.20 level at 147.40, and as you can see now we're 50 pips stronger on the dollar. First level of resistance is going to be found at 147.40, followed by 148.20 and 148.65. Above 148.65, we have the infamous 150 level. Below 146.90, first level of support for the euro is going to be found at 146.50, followed by 146.10 and 145.60. Below that, we have 145.12. We do anticipate a stronger dollar. Again, we have a lot of news today and tomorrow. I think until the weekend, we're going to see some sort of perhaps a dollar strength, maybe a bit of a consolidation near the 147 level. Until further news comes out, I don't anticipate much more dollar strength. I don't think we'll fall below 146.50. If we do fall below 146.50, we're going to see 146, but I don't think we'll close below that level. So the 146.50 level is going to be interesting. Pound dollar currently trading at 163.20. First level of resistance can be found at 163.50, followed by 164. Above 164, we're going to run into resistance at 166 and 167.36. A lot of empty space here. We can look at this last pivot high as an area of resistance at 164.65. We'll throw that in there only because that gives us a nice M pivot formation for further dollar strength. One thing that I want to point out is we have a Fibonacci retracement from this pivot high to this pivot low just a few days ago. If you can tell, the 61.8% retracement level is right up here. is right up here, and the 50% retracement level is right here, and you can see that we've retraced right in between that and continue lower. So this is what we like to see. We like to see, excuse me here 1 second. I'm gonna change a thing or two here. Here we go. What we like to see is we like to see a formation going down, a reversal to about the 50% retracement level right here. Sometimes we see it to the 38%, sometimes we see it to the 61%. Sometimes we see wicks just above those levels, but this is a perfect sign, the 50% retracement level, and now we're seeing a continuation lower. Not a 100% diagnosis here, but this is what we're going to be playing here over the next few days. So as I mentioned, our first level of support for the pound is going to be found at 162 even, followed by 161.50. Below that we have 160.60 and 160 even. This 161.50 level may be hard to break through. This is where we saw several times support on this wick, on these two candles, and lastly on this last pivot low. So 161.50 area is going to be tough to break. Once we break through that, we do anticipate a fall further towards the 160 level. Below that, 158. Next up, we have the dollar Swissy, currently trading at 102.87. First level of resistance can be found at 103.50, followed by 104.25, and above that 105.50. Above 105.50 we have 106.50. First level of support for the dollar can be found at 102. We saw that level of support yesterday. Below that we're going to see 101.30 and one figure even. Again, we're anticipating a dollar rally, so this would be a perfect time. Now, one of our strategies that we cover in the members section is a two-bar reversal. This is what you're seeing on a two-bar reversal, meaning that one bar, this bar, is closing higher than the previous bar. If that were to happen on today's candle, then there's a chance that the pair may go lower. If you want to cover that opportunity, join us in the members section. Next up we have let's cover the tops. First level of resistance is going to be 103.50, followed by 104.25. Above that we have 105.50. 106.50 and 107. Dollar yen currently trading at 91.52. First level of resistance can be found at 91.60, followed by 92 and 92.50. Above 92.50 we have 93.20. More importantly is this 92 level, 92 to 92.50. We've established a pivot high. We've established a lower pivot low. This seems like this could be trending higher, like so. At the same time, we may have a wedge forming, and the pair over the next day or two may consolidate within this range, finally breaking up higher or breaking to the lower side. So we're going to be paying close attention to that. We think that the dollar is going to continue to lose ground, specifically against the yen, and go lower. That's what we're going to be expecting. And this is one of the things we're going to be covering in our members section on another two-bar reversal, which is actually a current trade that we have in progress. So folks, keep an eye on these possibilities. We'll cover more on Friday. If you'd like a more detailed analysis, never hesitate to join us in the members section. This has been Alex Kaczmarek for the FXEdge.com free daily video, September 24th, 2009. Good luck trading.